Good afternoon, everybody. Good afternoon, and welcome to Paul's Monday Market Update 180 for Monday, 7th of April, 2025. As always, you're very welcome here, but just remember that you are always responsible for your own trading decisions. So, this is a chart of the 10-year Treasury yields, okay, US government bonds. Why is this of interest? What's the relevance? What people have to realize is that the Treasury Secretary, Mr. Besant, he is not a central banker. His background is hedge funds. Okay, he is not from Yellen's little tribe, so to speak. He's a hedge fund operator. Okay, so he has a different set of eyes in terms of what he's looking at, and in particular, America, to my understanding, and I don't consider myself a bond expert or fixed income expert. Okay, there are some fantastic voices out there that can help you. But my simple, superficial understanding is that the US government has a refinancing issue, okay, in that they have, I think it's about $6 trillion needs to be refinanced. And of course, rates are higher than when those particular debts, IOUs were issued. And so, of course, the important thing, all right, for Trump and Besant is actually it's not necessarily the stock market. It is about getting yields down. So when they come to refinance, that makes a considerable difference. So how do you put that into some sort of perspective? Well, let's get the old drawing tool here. So they came in, all right. Trump came in. I think it was around about here, sort of end of January there. And as you can see, the yield on 10-year debt was, I think it was about 4.63. All right, 4.63. And on Friday, it closed at 4. Okay, so 63 basis points, all right, has dropped since Trump took over. Well, you might be saying, well, what does that mean? My understanding, once again, it's a very simple, superficial understanding on my part. There will probably be people who can explain it better. Is that every basis point, okay, every basis point lower saves the US government $1 billion when it comes to refinance. So there's 63, okay, 63 basis points at the moment. All right, we actually gapped down this morning in the open, but have come back up to around about 4. But that 63 has probably saved them about $63 billion in refinancing costs when it comes to refinance that $6 trillion of debt. Some might say, you know, you've saved $63 billion in refinancing, but you've wiped off nearly probably somewhere between 2 and 3 trillion from $2 and 3 trillion from the stock market. Was that a good trade? And I'll let others debate that. But the reality is that's what's driving Trump and Besant, okay, and that's why they haven't shown as much interest in the stock market as perhaps maybe people were expecting. People were perhaps expecting Trump to come out yesterday and say something to sort of basically give people a little bit of a pump, a little bit of hope, but it wasn't there. So what we need to be doing is, as I said, watching those 10-year yields and see where that takes us. All right. So as I said, close about 4. People will be interested to see how it plays out this week. And as I said, it's a very superficial, simple, superficial way of looking at it. But every tick saves the US government $1 billion in refinancing. And that, as I said, that is my simple understanding, and that's why we're sort of being driven the way we are.